The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble host, the koala bear of Wall Street, David White. As always, an interesting day. If you're in the stock market, you are cursed by the Chinese saying, may you live in interesting times. But certainly this market has done more for bulls and bears to probably get them to jump off a tall building or have a heart attack than just about anything in a long time. Of course, we're off 26 points on the S&P cash as we start off the show. Interestingly enough for me, or at least what I'm thinking about, in fact, I was just talking to somebody in the den, private messaging them, and yesterday they were making some comments about how tough it was to be short here. And I said, well, it's always like the market does to you, especially at highs. It will test you more than just about anything else about the courage of your convictions. And I am glad that we've come out on the other side today. Of course, probably going to see a little bit of bounce here. No one's going to want to walk away from this market instantly, and we're going to continue to see people come in and buy dips. And with a high short interest that I suspect we have, we're going to probably have very high and sharp pullbacks. More and more, this market is reminding me of the 2000.com bubble than the 2007 housing crash. And there's a good reason why. We're going to get into it in just a minute. I really didn't know how to explain it, but somebody came on TV today and why 99.9% of those people on the financial infotainment cable channels have nothing interesting to say. This gentleman put it in a nutshell, and we're going to bring it up in just a little bit. Other things of interest out here, of course, are history. Histoire. On this day in 2000, Jeffrey Applegate, chief U.S. investment strategist for Lehman Brothers, tells Business Week, technology stocks are the growth stocks of our era, period. Adds Applegate, is the stock market riskier today than it was 2 years ago simply because prices are higher? The answer is no. Applegate recommends that his clients have at least 60% of their portfolios in tech stocks, nearly twice the market weighting. Is that really such a good idea? You bet, he says, declares Applegate. Over the next year, tech stocks lose over half their value as their earnings growth completely disappears, mostly because it didn't exist to begin with. We've railed against this for the last 3 months, and the problem is that, like a thief in the night, stocks built on earnings that are bogus will evaporate in a night, and they can take a huge amount of earnings with you. And not only does it hurt your pocketbook, it hurts your soul. And I saw a lot of the best traders not able to come back from it. Luckily, early in my trading career, I discovered TFNN. I want to thank our fearless leader here at TFNN, Tom O'Brien. Even back in 2000, I think he started trading, in 1992, very actively, maybe later. But he said one thing, and I say it a different way. He said you have to go through a few of these market cycles before you're going to figure it all out. I always give the example of acquired knowledge that I found early on in my life with a local stereo retailer, car stereo retailer, that shoved his salespeople in the install bay for a year. If they stayed there and they installed stereos for a year, they could come out and sell car stereos on the showroom floor. The reason why is back then, stereos didn't fit in everything. Every car company made everything a different size, and you had to know what car stereo head would go in, what stereo speakers would work with that, if you could mount them, where you could mount them, and whether any of or all of that stuff would work. People that had and wanted car stereos pretty much would line up to get somebody that actually knew the right answer. And by just putting an employee back there for a year, not only did they install stuff and get paid, they had acquired knowledge where none of this stuff was written down. Even if it was written down, it probably changed faster than anybody knows. But sometimes the only thing you can do is go through it to really understand it. And now I've gone through the mini crash of 98, the total crash of 2000, the bottoms of 2004, the highs of 2007 and 8, the bottom on 2009, and what I suspect is the huge bubble created by the Fed and the top of what we've seen here in the last few days. Now, no market flips like a dime. It doesn't just happen like a light switch. We've seen these topping formations take a long time. Normally you get a double top, and I think we probably gotten everything we needed to get there. Yesterday, toward the end of my show, we had a couple of callers, but a couple of them said, were asking, and I said, to me, the problem with the risk was not going to be whether I bought a quarter higher or a dime lower on whatever he was looking at. The risk to me was not being in on the short side, and hopefully he jumped in there. So hopefully all of you, maybe you, followed me. And like I said yesterday, we were adding more short positions in the newsletter yesterday at the close, and I even found a even juicier one to buy at the open today. So we are now 100% short in the daily newsletter, and already all set up in the Tech Insider for the tech wreck of 2014. So anyway, interesting parallel back to 2000 today to start the show. If you know if you know any people that have been to the great Far East for our country, they have a saying in the military. It's called "embrace the suck," and that is just get used to all the problems that come from a very chaotic atmosphere. But this morning I was looking at adding that additional position this morning. And I was looking and I thought, okay, should I wait till, normally I like to wait till 10:30. I said, well, I kind of was thinking the same thing yesterday. The top would be we'd just gap down this morning and that would be it. But we were looking at all these IPOs. In fact, this is the biggest week for IPOs since 2007. There was supposed to be 16 of them. There was up to 19 of them kind of floating around. 3 more might have been added by the end of the week. I started seeing this late last night after about 6:30 or 7 o'clock. La Quinta prices IPO at $17, below the range. Alley Financial prices IPO at $25, below the low end of the range. This morning, Cerulean Pharma prices IPO at $7, well below the $11 to $13 range. The rest of them didn't even price, and maybe we'll get a few more of them pricing tonight. But this was everything I needed to know when I went to bed last night, so I didn't have any real problem worrying about a lot higher prices this morning. We talked yesterday shortly about Alibaba being delayed into Q3. That also told me already what I needed to know, and that was the happy days are here again. Top of the market, 1929 September. There's no end to blue skies out there, was coming to a close. And, of course, this was going to be the busiest week for IPOs since 2007. And what does that tell you? Some people are saying this and blaming this on taxes. I don't blame it on taxes. Almost everybody, I suspect, probably would have paid their taxes before. They were all in huge winning positions. They either didn't sell, or if they did sell, they had to pay their taxes, probably already shipped it or sold it off already. So I'm not buying taxes as a big reason right now, especially with the incredibly light volume we continue to see for every one of these jumps. Now, this is options expiration week, and we'll get into that a little bit. But also, after the close last night, I went through options. They told me that we are looking most likely for a low somewhere around 1810 between now and the options expiration cycle. So maybe another 35 points down. And then maybe at least the option guys are expecting after we hit that 1810 range, they're looking for a bounce, maybe back up to 1840. So I think we're going to be now in a lower trading range, and we're just going to continue to ratchet that down while everybody tells you to keep on buying. So embrace the suck, as they say in the military, because it will be that way. What else did I have out here? Hang on just a second. Let's move. I got to move everything around. It's not as easy as you would think, but we'll get working on it. But if you didn't or haven't been watching the news, here comes the Godfather again. Old Godfather has decided to give up. Carl Icahn lost yet another battle, this time with eBay. Comes away with one concession, and that is he's agreed to add one member to its board as selected by him. So is this going to be a miserable, mean drunk, a wife beater? Probably not. Is it going to be somebody from the family? The family. Maybe it's Michael. Who knows? But he's still throwing his cash around. And what else can you say about it other than that's it. But always have to play that music from The Godfather. Every time The Godfather, Carl Icahn, comes around. Of course, if you were watching last night after earnings, after the bell last night, I'm looking for Bed Bath and Watch Out Below. It's hard to actually see, what is it, BBBY, let's get a current quote on it. It's been down about 6% all day. It's down, yes, still down 6% on some very massive volume. Let's see, BBBY. Let's take a quick look at this, if we can get it. Everything is going very, very slowly these days. And we'll come back to it. We are going to break. So anyway, I'll be back in just a few minutes. Oh, there it is. Bed Bath and Below. This thing's headed to 6212. We'll be back in just a minute. Give me a call, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, of course, you can always call me at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can post a message in the den, which someone has. And it's John from Philly. It says, in the last 4 weeks, Goldman Sachs has done numerous things. COO Cohen writes op-ed slamming HFTs. Lewis book tour begins about the Flash Boys. Goldman Sachs announces selling Spear leads. DOJ, SEC announces HFT crackdown. Goldman Sachs hints at a shutdown of its dark pool Sigma X. IEX rollout is emphasized. Do you have any ideas what the bigger plan is? And I would say, from what I can see, it was that there was a lot of money to be made in high-frequency trading early on, and Goldman Sachs worked very heavily on it. As more and more people got into it, the market adjusted. My guess is that the money that was all being made is now just being sloshed around from one high-frequency trader to another as they all beat each other up trying to get to the piece of cheese first. It works great when you're the only one doing it. It's just like hedging. If you're the only one that's hedged, it works great. If everybody is hedged, it's like there's no hedge at all. And once everybody had high-frequency trading systems set up, the golden days of the gold rush in high-frequency trading was probably over. So as long as they have it, is there a little money to be made? Yes. Was there a huge pile of money to be made before? I think so. And we're probably seeing as more and more they pull the layers of the onion away from Goldman Sachs. The question is going to be how many people sue them because they had their own high-frequency trading system going and scalping their own customers' trades. And I think that when we get into it in the months and years ahead, we're probably going to find the same kind of front-running that we saw in the early 2000s. It wasn't any different then. If you haven't been trading that long, there were all kinds of broker-dealers selling and capturing a quarter, 50 cents, a lot of times front-running customers, moving the market to get after the retail trader. All those people were fined. Some of them were kicked out of the market. A few were thrown in jail. But when we're involved in the stock market, it's not because we're expecting to be Mother Teresa and save the world. It is to make money. The people that get involved on Wall Street are only driven, I'd say 98.8% of the time, driven by financial gain. They're not doctors. They like to win. They are all, for the most part, ape-type personalities. They wouldn't exist there or be able to exist in a company like that if they weren't. I've always talked about the problems when you get a mindset of like-minded people together. In doctors, they indoctrinate them to be and believe that they're almost infallible. That spills over into the personal life. And same thing with cops. You get a mindset where people spend most of the time with the same people, and it gets very hard to get them out of the mindsets that they're in, especially the most damaging of them. But the reason I bring it up is when I was learning to fly, they told me that, the instructor asked me, "You're not a doctor or a lawyer, are you?" And I said, no, I'm not. And he says, that's okay. That's good. Because that kind of upbringing or idea is the reason why the number one people that die in planes are private planes, are doctors. And secondarily, it was lawyers. They all think that they have to be back for Monday. And they shouldn't have gotten that plane if they knew that they had to be back on Monday. They fly into conditions that are far worse than they could ever imagine, and why they had to be back on Monday. And guess what? They ended up in some farmer's field in the side of someone else's building because they probably pushed the limits of their ability and their plane, all because they had to be back. And you can't get into a light plane and guarantee you're going to get anywhere on time. And when the weather's bad, you just have to pull the plug. You have to have a stop. And that's the problem with some mentalities. Not that they're evil people, but they get sucked in to a belief system that just doesn't work with what they're doing. Anyway, we will be back in a minute. Give me a call. Email me. We'll be back in a flash. Not a flash crash, though.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Anyway, we are coming back to you now. And, of course, looking at a market, it really looks like this market, unless we get some kind of surprise tomorrow, looks like it's going to sell right into the weekend. And then we're headed back down to the lows. And what else can you say? But this market really looks like it is finally cracked and not at a better time. We certainly needed to get a retracement into this market. And that it took 3 years to get up here, I'm not going to be surprised if it takes 90 or even 180 days to find a bottom. So if you are thinking about shorting this market, you can get inverse ETFs if you're not used to shorting, or you can do things by puts. There's a lot of ways to make money. And, of course, I like this side of the market, and most people that have been around for a while do. It is nice just because you make a lot of money very quickly. The market goes up and the market goes down. The market's going to be higher probably about 3/4 of the time. It's going to be in some kind of up movement. The problem is that it comes back just as fast in 1/4 of the time. And that just makes it a little easier. Certainly makes it a lot scarier, and a lot of times you have to have the faith of your convictions, and that would be it. Back to the question about Goldman Sachs. I think you can, one of the reasons that makes me think someone IM'd me, said, why do I think that that they've kind of hit some kind of best case scenario in high frequency trading where they're only making maybe an eighth or a fourth of what they used to? The answer is the ads that are out for programmers in quantum physics, where I reported even a year and a half ago that you could get paid $450,000 a year starting at Goldman Sachs in their high frequency trading rooms if you were a PhD in quantum mechanics. You had to be able to work very well with uncertainty and also be a pretty smart dude in math. But those ads aren't around, and when they are for other companies, down to about $250 now. So it is. It looks like maybe a market that, of course, just like the gold rush out there, everybody will run to it, and eventually all the easy gold is picked up, and that is it. So we can get to other things in the market. Maybe, I got a few more things to discuss out here. Wanted to get to TAM. We talked about this early in the show. And, of course, John Fitchhorn is a noted long and short seller. He's been around, I don't know, at least famously for maybe 15 years. But he gave a name to what I already knew was out there, and I just hadn't heard the name before. But it's a lot of this inside baseball stuff, since I don't live in downtown New York City to hang out with these guys and have beers. Everybody has their own short nomenclature for what they do. I've been reading a lot about what the military calls various things the last few days. Maybe it's crept into what I say on the show. But this is what they are all telling or trying to tell each other is the new market, and probably where it fails. And what he looks to short on stuff. It's the same thing we hear about Facebook and Twitter. They go, the total available market is $50 billion. If only they get $1 billion of that, or $5 billion of that, or $10 billion of that, the company's going to be worth X. Well, that's another way of saying if you just get so many click-throughs in 2000 that our company's going to be worth this, or you get so many eyeballs that our company's going to be worth this. It's the same thing, and it always comes back to what are the real GAAP earnings, not non-GAAP earnings, not made-up stuff, not we can just ignore all this other crap over here and off-balance BS like all the giant scams of the 2000s. But when you hear that, or you hear somebody say, the total available market, he calls that the TAM, and he quickly switches the channel, he says, and thinks about shorting that particular company because TAM is BS, GAAP is real. And I thought you might be able to find it on CNBC if you look. I haven't seen it, but I think it was in around 12:30 Eastern time. But this guy had a lot of good answers into people that were yesterday telling everybody that the market could only go up. And they were all standing there next to him and going, yep, because I have a feeling he made a case that is hard to go away. I wish I was that eloquent, but I guess I'd have to live in New York City. And just too crowded. I like it. I dislike it when I have to wait more than a couple of minutes at a stoplight. I don't think I do well with all those people. Ugh. Not all of them take baths either. Ugh. And you got to get into those little tubes, go around the city. Just not for me. Farm livings, that's the life for me. You got to get out there to Green Acres. What did the guy on TV say? I just said. He basically said that there were a bunch of stocks that were ridiculously overpriced. He basically came on and said that he was short all the stocks that I shorted on the first cycle. And looks interesting. We've got Rob from Montclair, Missouri. How you doing, Rob?
Hi, how are you, Dave?
Pretty good. I'm trying to remember where Montclair is.
New Jersey.
Oh, he put Missouri on here.
Oh.
So,
my question was, I'm short the S&P 500, and I was wondering, would you switch that to be short the Russell, the NASDAQ, the small, anything, or would you just stay where I am now?
I think you're fine. I would say that the Dow is going to be the top 30 stocks and the top 100 stocks for market cap in the S&P are probably going to be the best defended. So I would look for the S&P 400. I would look for the Russell 2000. The problem with when you get down to the small caps, I think most of them have already been blown up. There isn't a lot of meat left on the bone. But I think all those stocks kind of in the middle, those mid caps, probably have the best to be in those. But to tell you the truth,
I get your newsletter.
Yeah.
And I was wondering, I have SPXS, the 3 times SP 500.
I think they're all going to do fine. The question is if you're going to find a better, faster horse. And I think you're probably going to do well on all of them.
Okay.
I wouldn't be jumping ship just yet. But basically what I like to have is no more than 10% in any one. If I go to an ETF, I might just have as much as 20%. But I don't like to be in any one single either ETF or anything else. I like to spread it all around. And even if it's in similar things, I don't want to be in one ship and have all my eggs in one basket. So if I'm in a ProShares here and then I can be in in another ETF owned by another company that pushes it, I kind of like that. Then no one single company going out of business, even if they back that ETF, can take me out. So when you see in the newsletter that I may be short several things or in several ETFs, those ETFs may be from different companies and or have different people backing them. I don't want to get wiped out by one. You know what I mean?
Okay.
There's not a lot of risk in those ETFs, but it doesn't matter. If you got your cash out, there's always at least one risk. And even if it's 1 in a million, I still like to be in multiple things. So instead of probably selling one, if you've got my newsletter and the one this morning that I picked, I probably would just take some money out of one and put it in the other. So you have a few out here, and you kind of just aren't stuck all with the same company that is backing the ETFs.
Okay, thanks very much.
You bet.
Okay, bye.
Okay, and see what else we have going on here. Okay, I got a question. If you have missed the boat thus far on IBB, would you dare short it at this point? If yes, how or under what conditions would you approach an entry? I tell you what, I'm not one to chase stocks. Let me put it that way. This is David in Denver emailing me, and I forgot to do something, so I better do it now. Come on.
You've got mail. You've got mail. You've got mail.
I shouldn't click that many times when it doesn't do anything. Anyway, David in Denver says, would I chase it? And the answer is no. I think that probably the easiest money is over in both biotechs and a lot of these high flyers like Netflix. What you're really going to want is for these things to bottom and then bounce and have a good 50% bounce and some huge short covering, and then we'll get them again. And I just don't chase, and I don't think, especially in these biotechs, you can get whipped around. You didn't get much of a retrace out here. What did you get, 228 to 245? I suspect that's just because of the enormous weakness of these markets. But as I look at this, I think you're going to make what I was telling the caller before, that you probably want to look at not the top 30 Dow stocks, and you probably don't want to look at the top 100 stocks in the S&P 500. You probably want to look down from there, and I think that there's a great deal of money in that part of the market that hasn't been hit yet, because my guess is that's the next one where you're going to start seeing huge moves. You're going to see the moves in the NASDAQ from here out probably a little bit more muted, as the rest of these mid-caps are probably going to try to start catching up. So it is going to be about sector rotation, but it's going to be about sector rotation on the downside. Let's see what else we have. I just wanted to check anything else out here. Okay, we got consumer sentiment tomorrow morning. And let's see, anything else out here? I was just looking to see if there was any news. General Motors came out and said they're going to have to put in $1.3 billion. But kind of hard for me to see what was going on in that. But we will find out. Montclair, Missouri. I was always wondering about that. General Motors, of course, it's not as bad as you would think. Maybe all the bad news is baked in, at least for a little bit. Not a lot of volume here today. But that was interesting to me. Some of the other stocks that I thought were very interesting we've been talking about for the last few days. And again, you can call me at 877-927-6648. Okay. And, yeah, it's this Archer Daniels Midland up here. Like I said, there's a lot of stocks up here with light volume. This is another one that had 4.6 million shares yesterday, 3.2 million shares today. And even some of these bigger stocks that are up here might be easier risk rewards than chasing some of these high flyers to the downside. Let's see if I get anything else out here before we look quickly. I wanted to look at Expedia here. Okay, we're at 1841 on the S&P cash, 2.5 billion shares. And a lot of these stocks, like I said, it's going to be sector rotation. We had tests on lighter volume, and that's only a quarter of the trade. And a quarter is going to be that sector it's in, and 50% is going to be the market direction. So when we look at stocks like Expedia, I think I showed this in the newsletter this morning. Certainly, I probably wouldn't have picked this one to be short. But most of the damage from 81.78 back down to 67.56 is probably in. You're probably going to see this thing bounce and go sideways even as the market goes down. And then one day you're going to have that big gap down. Now, when we looked at BBBY, one of the things I forgot to bring up before the break when we talked about it is this thing's on its second big gap. There's going to be a lot of these stocks that are doing three gap down plays, and we're probably going to want to buy these things when they get that last gap down and then consolidate for a little while. But on Bed Bath Beyond, you want to watch this one because I think we've got a third gap down probably coming, and it may be the next earnings. But the last earnings, huge volume down. Today, same thing. This thing is going to get down to 62.12 quickly enough. And then maybe we're going to go through another 3 months to the side, and then maybe another huge gap down of, 12, 15 points. So we need to be watching it. And I thank Danny and the Den for pointing out we've got 1,000 ticks out here. But my guess is we probably aren't going to see any stop of selling until we get to the close tomorrow. We got, I think, a ton of people flipped out of the market that were short yesterday, and there is going to be a lot of people, natural buyers, to step in. We'll be back in a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Dive. Yep, we got a market headed down, and what can you say? We're off 32.5 points on the S&P cash, 2.5 billion shares. Volume has slowed down a little bit down here. And when we look at options expiration, I always like to bring that up. We've got a very interesting market. I'll be interested to see what we have at the close here today. But it certainly is going to be problematic. Let me put that at best. To figure out. But last night, or at least last night's close, options were telling us that we could get down to about 1810 on the S&P cash. And I think we're probably going to see a little bit of push down, probably a bounce back up. At least that's what options for May are telling us. Maybe a lot of selling and then maybe a little counter trend move back up in May, and then probably head on down from there and maybe sell through the rest of the summer. But I don't think it's going to be easy for a lot of folks out there to see that it's going to be probably 2 steps back, 1 step forward, probably for a while until we find some kind of buy below, and there probably will be a few. But it could be, we've been gone up for 3 months or 3 years, almost 4 years. Could be a good 6 months, 9 months to take that back and get back to some kind of fair market value that isn't based on TAM. right? So that would be interesting. But that's what our options look like right now. 181 on the SPYs. And I think we probably have a good idea that we're going to hit that fairly quickly based on just how weak this market has been. And, I think our first level of support we're probably going to see maybe today, maybe tomorrow is going to be 1827. And at that point, we're probably going to get a little bit of bounce and a little bit of fire and lightning. And then I think we're probably going to move on back down to that 1810 and at least touch it. But going to be very interesting to see how volumes come in at the end of the day. If everybody starts blowing chunks on this. And again, yesterday I said I was going to wait till the close to put orders on, and I did. I put one on and the other one at the open this morning. But it is, I just don't know if you can get a better setup now than to be short for a while. And we've been waiting for this for a long time. Will it test you 100 times? It certainly will. But I believe the big money is going to be in the long-term trend here, not in the individual fluctuations, trying to pick up a buck or two. I think you'll be tripping over dimes and watching dollars blow away. So will be interesting. Any guesses if Tom will use the phrase liquidation event on the show today? I don't know. Certainly we are selling. Wholesale liquidation, I don't see the volume yet. 2.56 billion pretty much says we're going to probably come in with 3.5 billion at the end of the day on the New York Stock Exchange consolidated tape. That includes all stocks, all shares, whether they were traded on the floor or on any ECN, including the Amex stocks. But that's still volume isn't anywhere close to any kind of capitulation volume. So we're probably looking at a day where we get 5.6 billion shares, something like that, to get a first leg in and completed on this market down cycle. Anyway, we'll see you tomorrow. Same bat channel, same bat time. You all have a great and wonderful evening.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.